Welcome to the Honest Money Show. A big thanks to our sponsor, Shop Bitcoin Australia, for making today's episode possible. I am very pleased to say that joining me today is a local Bitcoiner, Dale Warburton. Dale has a podcast called Why Bitcoin Show. And if you go to his website, whybitcoinshow.com, you'll find a great range of calculators that I keep referring people to. Welcome to Honest Money, Dale.
Thanks, Anja. Real pleasure to be here.
I love that you came prepared with a microphone.
I'd have to be here as a podcaster. I'd be pretty amateur at this.
Yeah. So you've recently released a book called No Tenants, No Troubles. It is making a case for why Bitcoin instead of real estate. So that's what I wanted to talk to you about today. Tell us about the book.
Brilliant. Well, I think the origin of it was, I thought to myself, I wanted to make a some sort of lasting impact. And so much of what we do in the podcast world is, I think, quite ephemeral in the sense that no one's going to be listening to what I have to say maybe 6 months out, 12 months out. It's not, in the cosmos of time, it's kind of irrelevant. Whereas with a book, hopefully, if you've done your job, it will stand the test of time and it can actually age quite well. And being a I've worked in real estate in one capacity or another for more than a decade, I know the asset class really well. The only thing I never did was kind of property development, but everything else I did. I also got a master's degree in real estate. So I get real estate. I get why people have invested it and why people love it so much, particularly here in Australia. And so wanting to make some sort of lasting impact in the space, I thought, well, why not just write a book? Well, I got nudged to do it as always. And essentially the book is a high level overview of saying, look, this is what is happening in Australia. This is why real estate is really expensive. And in many parts of the world, these are the kind of main drawbacks of real estate when it comes to investing in them, not just owning them to live in, because that's a very different thing. That's like a lifestyle asset. I'm talking about real estate as an investment. And then comparing that to Bitcoin and just having a look at all the different qualities that Bitcoin has relative to real estate. And if I'm honest, there's no comparison. It's the easiest decision in the world. However, for a lot of people, that's not that obvious. So my goal wasn't to talk to Bitcoiners. So it was more to try and talk to investors in real estate, because I think we need to try and break the fiat matrix real estate mind of these people and just kind of go, hey, once you see this, you can't unsee it. And so my book, No Tenants, No Troubles, the case for digital gold over real estate, I deliberately left the word Bitcoin out to not scare away these property maxis, is an attempt to try and bridge that gap.
Yeah, I love it. And I have heard from so many people, obviously in the Bitcoin space or just new to it, that they are slowly moving out of property and into Bitcoin. There's a boomer in Queensland that I quite refer to a lot on this podcast, but he's such a good case study. And, he's someone who's invested into real estate his whole life and has only come across Bitcoin, I think, since 2017. And yeah, he's definitely kind of seeing the long-term value. He's got 10 grandkids. So he's like, Bitcoin's the way to go. Have you had any early feedback from the readers of your book?
Yes, and surprisingly, from places I wouldn't expect. So I've had readers reach out, from Canada and the UK in particular, which is interesting. And just to say oh yeah, it was very well written and a cogent, concise case. It's I wanted to make it accessible. There's, I love Lynn Alden. She's my number one person, but that broken money is a monster. And you just can't give people broken money, even if it's written incredibly well. It's too much work. People need stuff that's easy digestible. So that's been the main feedback. Said look, you've laid it out really well. I think you make a good case for it. And what I ask people to do is to also just share the book then with family or friends. If it's obviously a physical copy, it's a lot easier. So Yeah, it's been quite rewarding thus far. I must confess, I am one of the worst promoters on earth. I don't know if Australia has um, infected me with tall poppy syndrome, but I I haven't been sort of screaming from the hilltops, and I think yeah, I've been criticized by some people I love for not actually doing enough in terms of getting it out there because you can't just stick a book out there and go, hey, sell. Um, but of all the sales I've done so far, I've really got some great feedback, and it's rewarding. At least I know I'm making a difference.
Yeah, that's amazing. And I wanted to know, so in your book, how do I want to frame this question? Is it more based on like evergreen content, like this book is going to last forever because the underlying principles are the same, or are you going into data that's more, time sensitive? Like, for example, where is the housing market heading?
More so like evergreen. That was kind of the mindset I had, which was like, how do I make sure that this is relevant in 5, 10, 15, 20 years time? And it's something that I'll look back at and go, yeah, that was good. And I don't want to say like prescient because I'm not like, everyone knows this already in Bitcoin, but I was like, right, I was ahead of the real estate investor curve, if you like. Yeah, I think it's relevant across the board. That said, I do include a lot of data that is relevant as of today, but what I'm looking at is also historical data. So a lot of the graphs and charts that I've got are more so like over the last 30 years to have a look at kind of what's happened to housing in Australia, not just the median house price, but in terms of like the the ratio between the median wage and the house price, which is kind of just ballooned, and that's what really fundamentally makes it unaffordable. If the wages were keeping up with housing, it'd be no one would be bitching and moaning today about affordability. But the reality is there's like this massive divergence that's happened over the last sort of 25, 30 years. And there's a bunch of reasons for that. And some people tend to go, well, the money's broken. And I go, well, yeah, but also government's policy has created an environment that makes it advantageous to speculate. And that's, I think, actually the biggest driver more so than anything else.
Mm. So, who do you think needs this book the most? Is it people who boomers who have already a lot of property and might want to reallocate some of that into Bitcoin, or is it more targeted towards younger demographics who are completely priced out of the housing market?
I'd say both in the sense that it's for people who think that the best way to accumulate wealth is real estate, and those are the boomers, and kind of it's worked, and I acknowledge that. But the first thing I say is if you don't have an open mind, then everything's a waste. I don't want to say it's a waste of time, but you might as well just put down the book. So if you're prepared to like open your mind to a new paradigm, much like people would say, okay, we're going to send you some information and it's across this intangible thing called the internet, and someone's like, oh, I don't believe in this. Well, then there's no point in having a chat. It's the same with this. It's like if you're not open to having your paradigm potentially shifted, then kind of stop reading. If you're someone who kind of that can say, look, I'm going to suspend whatever beliefs that I've got firmly entrenched today for a period of time, for like a short book, and it probably takes an hour and a half to read the book. And if you like at the end of it think it's rubbish, that's fine, but at least try. And so, yeah, it's really for people who are like receptive to having their mind changed. And I think of people who are doing well in the financial sort of scheme of things, and who've watched Bitcoin and watched it kind of evolve from a cypherpunk libertarian movement to like I guess you want to say like an early adopter. Um, what would it be? You can call it like a speculative store of value. And now we've sort of transitioned into like the institutional phase of adoption. And then it's like, well, BlackRock and sovereign wealth funds are endorsing it. And now Vanguard, as of like the last few days, finally kind of bending the knee, so to speak, then maybe I should look at it. And I can just relate to people in my world who think like that and kind of go, yeah, this is a thing. And then it's obviously there's also a case for young people who want to buy property and are kind of going, how do I do this? It's impossible. And it's actually like, well, there is a way. I think it's the only way, unless you're an excellent stock picker. But you can figure out which AI stock is going to outperform Bitcoin, and I'm sure there might be one or two. But Bitcoin is the best risk-adjusted way for you to invest or save, whatever you want to call it. And I believe that that's the only path, because otherwise you're going to be outrun. And I use examples in the book of people that I know who've been outrun by the growth and their ability to save. So it's a long-winded way of saying both categories.
Yeah, so I wanted to ask you, with Australia, we all know that property is very much a protected asset class. Politically speaking, it is in every administration's interest to protect the property Ponzi, if you will. So how do you address that in the book?
Well, I first outline what are show me the incentives, show you the outcome. And the incentives have been such that it has been rational for people to have as many investment properties as they can, provided they can service that debt and effectively short the fiat currency, AUD, by buying negatively geared properties. And so that in itself has created an environment where wealthy people who just want to pay less tax are competing with first-time homeowners. And obviously wealthy people have deeper pockets, and that has just pushed up prices. On top of it, you have a situation where, and this is quite unique in Australia, but capital gains is not levied against your primary residence. And then if you've held it on with an investment property, you get a 50% gain discount on your capital gain. So those things combined, I think, have the biggest impact overall. Yeah, I guess I realized early, I wouldn't say actually, I was a bit later than I'd hoped, but I came into Australia in 2018 and I looked at the property market and I thought, oh, this looks a bit bloated. And I was living in Adelaide and it was super pedestrian, growing at 3% per annum. I was like, this is not exciting. Why do people care? And over the years, I've come to become quite pessimistic about the fact that there is such thing as the possibility of a correction. Because, I tend to think that politicians will do what's in their best interest to remain in power, and they'll also do what's in their personal best interest. And so many of them have significant investment portfolios, even if they claim to be, acting on behalf of the so-called ordinary Aussie, the underdog. Even our champagne socialist prime minister, he's got quite a nice portfolio. And so these effectively these incredibly overpaid bureaucrats who have no real skills in the real world, getting sort of 400,000 a year, they're able to plow a ton of money into investment property. So it makes sense that they're not going to do anything to either lose power or lose the value of their own property. So, there's nothing one can do to address that reality until such time as that the population becomes sufficiently noisy to say enough is enough. And we are prepared to, the young people specifically, by the way, as a voting bloc, as that becomes bigger and bigger, I think there is a prospect of change. Until such time as, dare I say, the boomers die out and their interests are basically, eviscerated because they don't exist anymore, and there's far more young people who today are sort of paying the price. I don't see this changing. I think it's it's a demographic thing. And so what I do try and do is inject a little bit of hope in the book and go, you might be a bit unhappy about the fact that you can't get into property, but wait till I tell you about this digital property thing, because it's even better. And so, once you understand that this is your generational investment opportunity. Boomers had low interest rates and they had a tax environment that really made it advantageous to speculate on property. You've got an opportunity to go to get in now, and it feels late, but it's so early, into this asset class that today is at 2 trillion, but there's no reason why in 20 years, 25, 30 years, this isn't like a 100, 150, $200 trillion asset because of all the qualities that I suppose you and I know very well.
Yeah, and that's an interesting perspective as well. Like when thinking about the risk, we've seen this slow creep of like taxation and progressive taxation happen in Australia. So investing in property today is a lot harder than it was 30 years ago, 60 years ago. Where do you see the property market heading to in the future?
No one knows for sure, but if I had to guess higher, and here's some other stuff that like I talk about often amongst friends is that people like to look at aggregate data when it comes to property, but that doesn't mean anything because every property is almost like the original NFT, like in the sense that there are no two properties on earth that are exactly the same. They might be in the, like, even if you have an apartment, it's not the same. It doesn't have the same outlook. It doesn't necessarily have the same design interior, or whatever the case may be. So each one is unique in and of itself, and then within different so you have regional dynamics, you have city dynamics, and those have been significantly disrupted by things like COVID, which kind of was good in a sense. It was accelerating what should have been happening with more businesses going, why do we have to pay such high rent to these landlords when we can actually just do this all remotely and perhaps get a much smaller office or satellite offices in the Gold Coast or wherever the case may be. So that was kind of good, but the regional dynamics changed dramatically. And places like, I used to live in Northern Rivers, and those places, they went absolutely mental during COVID because people were like, well, I can actually just, have my job in Sydney, get paid a fortune, and then come up here. It's really cheap. But the big picture is like there's so many factors that go into a property market. There's no one property market. Like I think a place like Melbourne is what you've seen as property prices go backwards, and it's largely because it's a heavily indebted state, terribly managed, crime, shitty weather. I mean, let's be frank, it's awful weather, and it's not a very friendly investment environment. Like there's lots of stories of guys who've had, their rates go from like $800 a quarter, and this is like commercial rates, to 15,000. And it's like, well, how do I run a business like this? Like, and then they get levied, like I think there's like a special COVID levy and stuff. So Melbourne's one thing. Brisbane, the government is spending a fortune on infrastructure, and that's where I am. And so there are so many jobs, and it's all in like infrastructure and property, and it's all around the Olympics. It's like, whatever it is, 3-week event. I mean, honestly, I don't get the excitement, but up until 2032, there's a ton of investment, like billions and billions of dollars. So people are coming here. It's also, I think, a less woke, more kind of live and let live. It's the closest thing to Florida we have, let's say.
Yeah.
So I think people have left, and it's got great weather for like 8 months of the year. So people are coming here. So Brisbane, I'm bullish on. Melbourne, I'm very bearish on. Perth is always cyclical because it's a regional market that's like very much on the resources cycle. If the resources cycle is on a downward trajectory, the housing market collapses. Adelaide is like dead for 20 years and then pumps for 5. And right now it's pumping.
Yeah.
It's more expensive than Melbourne, which makes no sense because there's zero business there. It's like a government-driven economy. Like half the buildings in Adelaide, I worked in commercial property there, are government tenants. So Adelaide, I'm going, yeah, a lot of risk here. I'm in Brisbane. I'm a property owner, luckily, and I'm kind of like, I think this is just going to keep pumping. So it depends where you are. I would be less comfortable about places like, Sunshine Coast, because I'm not too sure the economy is sufficiently diversified and developed there. But it's hard to say, Anja. But like generally, if you had to just take that aggregate number in Australia, I think just up.
Yeah, and with Adelaide, I was actually very pleasantly surprised. It is such a cute little town. Well, city, I should say city, but it was very pleasantly surprised when I visited there. But I know earlier on I mentioned that it is a protected asset class, but I did kind of remember as you were speaking, a lot of people are now feeling like they're being disincentivized to own investment properties because of the changing regulations. So we have a housing crisis, and it very much, there's laws being changed that protect the tenant a lot more than the homeowner, to the point of that it's very unfavorable for them. It's just the risk is too high. Like, how did you address that?
It's so what I do is kind of just highlight some of the inherent qualities of property, like that you can never mitigate away from.
Can't
So
live
like
in a Bitcoin.
you can't live in a Bitcoin, but like liquid, like Bitcoin's liquid 24/7. Property's not. So, you got these innate qualities of property, and the tenant is the lifeblood of the asset in the sense that unless you just want to buy and like maintain an empty home as an investment, you need a tenant. But tenants are people, and so people people are uncertain. You can't rely on them forever and a day. And yes, you're right. There's so many rules around like tenants having so many rights that you as a property owner go like, hold on, it's not actually your property, because in some places you're not allowed to deny a tenant who has a pet. Now, I love animals actually, but I would want to defend the right of property owners to go like, I don't want, dogs or cats here. I mean, that's fine. It doesn't seem like it's a problem, but governments decide, no, that's not fair. It's not reasonable. Um, so there's, you just have to acknowledge that these are the risks when it comes to property. And I kind of get to this at the end. It's like with Bitcoin, it's a set of rules. You know what the rules are. The rules are like in stone. We can bitch and moan about core and knots and whatever. We're always finding things to complain about. But no one's going to suddenly go, we need more Bitcoin, or let's change the issue and schedule or whatever. There's stuff that's like granite, that's in stone. No one's going to change that, like 21 million and all that kind of stuff. Property, you've got people, and people are a problem because you've got tenants. They can lose their jobs, they get divorced, they can wreck things, they can not maintain the property, they can, create meth labs. They can just, people are people. They can, not pay, and then you still have a mortgage. And then the other people with your property are the bureaucrats, and they need to be doing a bunch of social signaling to their electorate that we care about you. It's more signaling than anything else. It's not actually about care. So they'll go and enact a whole bunch of laws that are ostensibly to address some grievance, but actually, like, it's just window dressing. And so things like, we don't have enough housing, so we're going to limit your ability as an owner to do short-term Airbnbs. Or, we have to allow people with pets, or whatever the case may be. And so it's not your property. You're at the whim of these people. And I've experienced that as a property owner. Like, I want to do some things, and, this needs to be a certain height. And there's a whole safety compliance, complex, like, the military industrial complex. There's like a safety industrial complex here in Australia, which is like, I care about safety, and it's like, we must have the rails 17 centimeters above the ground, not 16, because then it's dangerous. And so, like, I had these people coming around the property because we built a pool and a deck, and I was like, no, your handrail's wrong. So they had to just do all this work to try and fix my handrail because some random kid could jump in my property. And I'm like, dude, I've got a baby, okay? And plus, we're Africans. We take responsibility for our children. So, it's not your property. And so that's what real estate investors need to know. It's like, you might agree with some of the rules, but yeah, there's nothing you can do. I'll give you one more example and I'll shut up. Basically, yeah, we bought a granny flat here so we could accommodate the in-laws when they come stay for long periods of time. And automatically my rates went up 33%. So I was like, I was like, are you guys like, are you sure, we're not doing short-term letting? He's like, no, this is how it is now. Just classify it as this. So I'm like, okay, so if I rent it out now, short-term, it's the same. Yeah. Okay. Well, now you're giving me an incentive to now go and rent it out because you're charging me now, 30% more for what would be a vacant granny flat. So, okay.
Yeah, there's just way too many examples like that. And this is why I have a strong bias towards Bitcoin because there's just so little to think about and to worry about. I'm the only person I have to worry about. Like the
Exactly.
responsibility ultimately falls on me. And I don't have to worry about tenants. I don't have to worry about the government changing regulations and laws and things like that. So it's a very peaceful way to live. And volatility, yeah, it's not something that actually concerns me. So if you had to summarize the pros and cons of digital gold or Bitcoin versus property, let's maybe just focus on Australia for now. What might those be?
Okay, so there's a lot, but I'm going to just kind of whip through what I think are the most relevant. So obviously, when it comes to Bitcoin, it's more scarce. It's infinitely divisible relative to property. You can't divide your property up, sell like a portion of it. Um, Bitcoin's liquid 24/7 globally. Property's not. You can take your Bitcoin wherever you go. You take 12 words in your head, whereas your property is very much jurisdictionally bound. There's a ton of transaction costs in property, and people don't necessarily factor that in when they're doing the investments. They just talk gross numbers. And there's ongoing costs when it comes to property. Whether it's maintenance, whether it's rates, taxes, all that kind of stuff. With Bitcoin, it's like just you might have some collaborative custody costs, like if you're using like a nunchuck or a Thea or something like that. But fundamentally, like it doesn't cost you much to actually hold it. It's much more accessible. So like you can buy like a dollar's worth if you want Bitcoin, but property obviously you need to have a sizable deposit. Like the government would say 5% is great. I think it's very stupid, but you'd probably want to get closer to 20%. Um, I think that Bitcoin's better because it's also super transparent. Like we know what Bitcoin's trading everywhere around the world. We know what the price is 24/7. It's like mark to market pricing. Whereas real estate, part of what makes it like really inefficient is I can't believe how many different ways you can sell real estate these days. And you don't need to disclose the price. And it's like, it's not an open market in that sense. Like you don't actually know what the value is all the time. And I think with Bitcoin, you really have like true ownership, like 100% fully self-sovereign. You might exist within a jurisdiction with laws as to what you can do with it and whatnot, but fundamentally, no one can confiscate, no one can take it, no one can tax it without your permission. Like they need your cooperation. With real estate, like it's just like a fundamentally permissioned asset. And then from an investment perspective, I think this is huge. Think about the emotional time and energy it goes into managing an investment property. Like people refer to their Airbnbs as if like that's the asset, but and it's just the amount of work like involved and the stresses of it. Whereas like I don't know how much time you spend on your Bitcoin, but maybe I do like a key signing ceremony like every 6 months or 12 months and there's no people to deal with. It doesn't really matter what happens with interest rates. I don't have neighbors. It doesn't depreciate. And as long as I looked after it, like, it's not going to get burnt down. So it's like it's like there's no contest. It's like, it's WWE versus John Jones, heavyweight champion of the world, UFC. It's just like, if they're in a fight, there's not even a competition. It's just, but you need to understand Bitcoin. If you don't understand it, you know, you're going to look at that and go, yeah, yeah, it's still internet funny money.
Yeah, that UFC reference was completely lost on me, but hopefully the listeners will understand.
Yeah,
Yeah.
maybe someone will. Yeah.
Need a way to sign, verify, and secure your Bitcoin? Australia's one-stop shop for Bitcoiners has you covered. From signing devices, nodes, and backup solutions to bitaxes, decor, and apparel. Visit shopbitcoin.com.au. But I also wanted to talk about your legal background. And I remember, I want to say it was earlier this year or last year, time has gone by so quickly, but do you remember when there was a court case, which I think was a criminal court case in Australia, and people were suddenly thinking that we were going to change the CGT rules on Bitcoin because there was a case where someone was trying to make a lawyer was trying to make a case that Bitcoin is money. No. Do you remember? I'm trying to this is very,
The details are fuzzy, hey, and
yeah.
yeah, I mean, honestly, especially over the last couple of years, my brain's a bit fuzzy post-child. I didn't even give birth, but I do know there was some sort of reference. So yeah, I mean, to me, that would be an incredible win as a community
Never
if we
gonna
can get
happen.
there. Could you imagine? I mean,
Yeah.
because then honestly, like if it got the same treatment as your primary residence, like basically, CGT free, it would be like we would attract a ton of people here. It would become like this really friendly environment for capital. But of course, that's as long as we've got the current crop in charge, and I don't even see a better alternative, frankly, at this point. But um, to me, that is a pipe dream, and I'm probably I'd probably be moving to another jurisdiction that does welcome that far sooner than that will happen in my lifetime. I can't see it happening here.
Yeah. I do remember now what it was. It was a lawyer who's trying to make a case that Bitcoin is not property, and therefore it was not stolen or something along those lines. And then people were getting excited. Oh, is this going to change if it's not property, then that means it's CGT exempt. And it was like,
Oh, yes, I know what you're
that's the
talking
one.
about now.
Yeah.
Okay. Yes, absolutely. Yeah, it was a very, and it was like, it was a magistrate's court judgment. And it's like, okay, if you understand legal precedent, which is like, and I'm not going to, say judge it, those guys don't matter, but what they say is pretty irrelevant in the big picture. Um, it's like, I mean, South African magistrates versus Aussie ones, I'd hope are a little bit better, or probably worse rather. So I'd imagine the quality's better. But when you go to the lower courts, like you can have an opinion, but it doesn't really matter in the because you can rule one way. If the people on the other side have the money and they don't like the outcome, they'll just appeal, and I can't see that ever being upheld. It was just like a single magistrate that I think deviated off course with. It didn't make sense to me. But anyway, look, we can live in hope, eh? We certainly can live in hope.
Yeah, exactly. But I did actually want to, that was in the lead up to my next question, is I wanted you to maybe explain to my audience about the difference between Bitcoin and crypto from a legal perspective, because I thought that would be an interesting angle.
So yeah, when I first got exposed to the space, say 2020, it was pretty obvious to me there was a significant difference, and it wasn't because had a unique lens or anything. It's just like I learned from probably the best, like the Lynn Aldens and the Parker Lewises and the VJ Boyapati, so that helped. But then when you spend a bit of time in crypto, and I did, it becomes even more obvious. So I, shortly after kind of discovering Bitcoin for the third time, I was like, I want to try and make this know what I'm doing. But it's not easy just to go and get a job in Bitcoin. There's not a lot of opportunities, and there's no CEO or marketing team. So I was like, okay, how do I work in this space? And I got because I've been, I can write really well, and I was like, you know what, maybe I can go into media. So I was in crypto media. I worked for two different publications. I was like their managing editor, and you got to see how the crypto sausage is made, if you like, in the sense of just incentives, right? So, like, just at a high level, and take the morality out of it, because I think crypto is deplorable stuff. Like, I think it is this um, asymmetric, one-sided, zero-sum, exploitative game that venture capitalists play, and retail's on the other end. But let's say I don't have that view. Let's just like talk um, more neutrally,
Tell me what
which
you
is
really
hard
think.
because I absolutely hate crypto. But Bitcoin, as Saylor would say, is like an asset without an issuer. There's no central authority that is um, mining Bitcoin. It's truly decentralized in the sense that you and I can run nodes. Um, and it is very much a commodity, much like no one's got the monopoly on mining gold or timber or copper or any of these rare earth minerals. Like it's the same in that sense. We can mine at home. I mean, we're not necessarily going to win. We're probably not going to win a block, but we could run a miner here, at home for very little cost. So you've got that, and then you've got crypto, which is like decentralized in name only, in the sense that you have to, in order for you to run a node, you need to have a very there needs to be a very significant tech stack. You need to be quite tech savvy, and it's very like you could say like data intensive, because what they're optimizing for is speed, and so they're largely centralized. They run on Amazon Web Servers, or things like that. And there's typically like a founder. They actually do have a marketing budget. They've got a PR team. And the best way to think of them is actually as companies. But unlike, and I use this example all the time. So if you and I wanted to create a company, and then go and raise a bunch of capital on the ASX or the Aussie Stock Exchange, there's like a million disclosures that you and I would have to make. We'd have to meet so many different requirements, just for us to be listed, because then you've got like a ton of liquidity. What venture capitalists figured out was like crypto is like a panacea, in the sense that you don't have to comply with laws. You can make up this thing, you can market this thing, you can say it does X, Y, Z, solves this problem, that problem, um, and what you have is essentially like fast time to liquidity. Like the hardest thing with a normal company is building it up and getting it to a scale where you can sell it off to a private equity company, or you can list it on a stock exchange. Like that's how you're supposed to do it. That's hard. With crypto, you can circumnavigate all that. You don't need to worry about disclosures. You don't have to worry about actually building a product with a product market fit. You can just promise stuff, and you can literally have instant liquidity on tap. And so what the incentive is, obviously, is for these companies, which are just unregistered securities from my perspective, which is another way of saying they're digital penny stocks. It's like, and they always have a series of promises and use cases, but there is no product market fit. And so the early investors who essentially printed this money, like this token out of thin air, allocate to themselves, obviously the developers, the early investors, the venture capitalists who fund the marketing, get like it at a dramatic discount. They then will list it on a shitcoin casino. The shitcoin casino gets paid a listing fee. So they're incentivized to lift all the garbage, Fartcoin, Dogecoin, well, it doesn't matter. Like as long as it's got liquidity. And so these things trade like yo-yos because there's very thin liquidity. They're highly concentrated. So like the Gini coefficient, which is like a measure of, inequality, like there's a small group that are like own a very large chunk. And then if you have the marketing dollars, you can pump that up and down. And so what these people have done is they've just been able to enrich themselves at the expense of retail. And I think it's in bad faith. I don't think these people are just ignorant, because it's too complicated for that. So, you don't find Ripple buying XRP or whatever. They just sell. And same with ETH. They don't buy their shares back. Like a company that believes in itself buys their shares back, but they just sell. And that tells you everything you need to know. And the same, every single one. And so they're all just utter garbage. There's no there. And the only thing they can hang their hook on has been that there are stable coins, and that's like actually a use case. And it started with ETH, then it goes to Solana because Solana's faster, more centralized. Then it goes to Tron, which is even more centralized, even faster. And so Bitcoin's trying to do things slowly and make sure that things don't break. And they're building like things really responsibly. And we're building in layers, much like the internet is built in layers. And so there's only one money. There's only, we don't need another email protocol as an example. It's already decided. And it's the same with money. Just, legally, companies versus commodities. And it's like, okay, that's fine. But all you're doing with crypto is speculating and gambling. And that's fine if you like gambling. It's like, I don't care. But it's not an investable asset class. There's nothing there. It's just anyone can spin up a token. And you and we could just, call it the Anja Dale token. And it's not that complicated. I've looked it up. It does require like probably $2,000 or $3,000 if you're keen.
If you're keen to make money. Yeah, it's interesting because I notice like, when my friends and family come to me and ask me about crypto, I'm like, well, Bitcoin, not crypto. And then I try to kind of steer them in the direction. And like, I don't want to come across as elitist or like I'm trying to be a purist, but I really do want to try to protect people as much as possible from that predatory marketing because it is just that. It is predatory marketing. But do you think that like their tune has changed in the last couple of years? I remember, well, actually I don't remember, but I wasn't around. Well, I was around, but I wasn't in the space. I mean, I was alive. But, years ago, they were trying to compete with Bitcoin. Do you think that narrative has changed? Like they're no longer trying to do that, or do you think they still are?
I think they do what's called like affinity scamming. So they kind of go like, well, Bitcoin's a real thing, but like, so we're similar. So it's like, so they try to like, it lends some sort of faux legitimacy to what they're doing. But definitely, the tune has changed in the sense that the narrative has to keep evolving. And like, this is not original, but my view is basically that, it starts off with like ETH is the world computer, then it's powering stable coins, which actually have value. Like people don't understand that there's something valuable about a digital US dollar token for people in like Malawi. Okay, that's helpful. And then it goes like, but hold on, we can create art and we can store pictures and things like that. And it's like, hey man, how backward are you? You still mucking around with physical paintings. We just create these little monkeys and, there's only 100 of them and, give me $500,000 or whatever it is. And then it's like, oh, NFTs are not a thing. And then meme coins come. And then meme coins are like I think it's the final boss of crypto. Like there is no more runway for crypto because when you have a meme coin, it's like a almost explicit admission that this is just pure nonsense. Like there is 100% no they're there. We're not even pretending anymore. Like, and I think that's what people have started to see. I think they realize like there was the meme coin, fervor and like, all the celebrities are incentivized to create their meme coin, like that Hawk Tour girl. She did incredibly well, her 15 minutes of fame and she created a token and like, was a bit of an imbecile, didn't know what it was and was like, some guys came up to him and like, hey, just let's build a Hawk Tour token. And then, obviously rugged because that's the way you play the game. And people were pissed and rightly so. But that's it. And I don't think there's anything left. If you also just look at the thing as like, there's a couple other metrics. The one is like Bitcoin's dominance ratio. So there's like a ratio, obviously, of Bitcoin relative to the everything else. And as the number of tokens has grown, I used to say 10,000, and like then you started building meme coins, and then you started doing like, that's why Safe calls them like the mother ETH, the mother arsehole of crypto, because You don't have to build a whole brand new blockchain. You can build a token on top of ETH. And so it just spits out all this utter horseshit. And so we have like literally millions of tokens. So as the number of tokens grows, Bitcoin's dominance ratio has continued to climb. And so it's like in numbers, it's just gone from 10,000 to maybe I can look up in real time what it is today. I mean, honestly, I think it was like 10 or 20 million tokens in existence. So what we see is the market telling us like, okay, this is not real. Then you start thinking about like, how many of them have hit like all-time highs since the retail speculative fervor of 2021, let's say? None. I don't follow crypto that closely, but I believe they haven't. Like, this is what I've actually read. If you look at a chart of these tokens measured in Bitcoin, which is how they used to be purchased, like you needed to buy Bitcoin in order to buy these crypto tokens. You also see the price goes sort of from the top left to the bottom right because everything loses value in Bitcoin terms. So when you think about, and then you layer on top the fact that there are no sovereign wealth funds that are going to be like, should we invest in this programmatically scarce, unseizable neutral reserve asset, or should we invest in Vitalik Buterin's Ethereum computer experiment called ETH, which is effectively a company without revenue? Like, it's not even a choice. So there are no serious investors in crypto. So for all those reasons, like, I think crypto will die. Like, I think, crypto in a decade will be like, oh, do you remember that? That was just absolutely stupid. Like, what were people thinking? But this is just part of the evolution of a new space. You're going to have an innovation pop up, a whole bunch of copycats, grifters want to come in, and they'll go, we've got a different Bitcoin. This is Bitcoin Satoshi Vision. This is Bitcoin Cash. We've got other tokens, Bitcoin Slow. And it's like, come on, man. Have you heard about Lightning? So, these are not serious people, Anja. They're grifters, and they ought to be dismissed instantly because I've seen it firsthand how it works at a crypto publication, and yeah, it's pretty appalling. So people need to try. They can speculate, that's fine, but this is a game for venture capitalists. This is not a game for retail. So buyer beware.
Yeah, I love that. Was a really, really good summary. And yeah, the BSV crowd is something else. I keep getting comments from them on my Twitter, and it's it's just very interesting. But yeah, I definitely think of like I think the crypto industry is so sinister that if I had a choice between working in central banking or in crypto, I would choose central banking. Like that.
What does that say? Exactly. No, it's unconscionable, and it's so funny because I used to work at a crypto magazine, as I said, and these companies would reach out, NFT creators, and they'd be like, "Oh, look at what we're doing! It's like, a piece of toast, with some tomato sauce faces, and like, these are some local Aussies." And so the owner of the publication, who subsequently sold it to a shitcoin casino, surprise, he went and bought those pieces of toast and then insisted that I run a toast story. So I couldn't help but be sarcastic about how the hell are people buying pieces of digital toast, and then had to have it like removed and then like apology. I mean, it's just, this is the kind of stuff that goes into it. The incentives. If you know that you can almost front run, like I can literally just see a bump up. I mean, the owner used to have a NFT on OpenSea, like his username was Noob Crusher. So in other words, I'm actually being really open about the fact that I'm exploiting you. I use my own publication. I promote all these worthless NFTs, and then you buy them on the back of that because it had great traffic and good SEO. So I was like, no, I can't do this.
If people tell you who they are, you should believe them.
Exactly. Totally unethical, that dude.
Yeah. But before we wrap up, I have heard in the grapevine that you have a Bitcoin will starter kit coming out. Do you want to tell us about that?
Yeah, absolutely. So, being a aspiring Bitcoin entrepreneur, doing different things, trying to see how I can make a lasting impact. One of the things I've noticed is that nobody talks about like actually having a will and feeling really confident in a will. And like um, being a lawyer, I tend to make things sound simpler than like they are. I kind of imagine that people can go, yeah, it's so simple, man. Why don't you just do it? And then I'm like, actually, you know what? I studied that for a long time, and I've been trained, and I know how to read contracts. I know how to think. So in that regard, I go, okay, maybe there is an opportunity to create like a Bitcoin focused will, like a starter kit that is low cost, that you don't have to talk to like a lawyer, that you can essentially complete on your own. It'll have all the fields available for you. And then but it's Bitcoin ready in the sense that you want to make sure that your Bitcoin gets transferred. And so I'm putting together like a Bitcoin will starter pack, and I'd love to get some sort of folks who just want to come and test it out with me, see how it lands. It's really early days, but I'm pretty excited about it. And yeah, I'm hopeful that it can be like long term, it could be like a low cost, let's say, get off zero in terms of your will, get something in place, because there's two things you want to avoid. One, the state getting involved in your affairs once you're dead. Like, you don't want that. And two, you want to make sure your Bitcoin is safely transferred. So if you self custody, it's only as good as your will. And if you don't have a good enough will and kind of the digital breadcrumbs, you're donating to the network. So I think those are the two core problems that I think this might solve. And yeah, I'd love to just get some feedback from people in real life. So if anyone's listening and wants a bit of assistance in that regard, get in touch with me.
Yeah, no worries. I will put all your contact details in the show notes. Do you have any final words for the audience?
What I would say is that I think much like most people, this year has been somewhat underwhelming in many respects, lackluster, and it's very easy to get complacent and feel somewhat cheated. But there's a couple things I've been thinking about, and the one is obviously we need to have a long-term time horizon with this particular asset, and no one said it was going to be up and to the right and easy. And the less expectations you have, the happier you will be. And also just remember that all of Bitcoin's trading days are like compressed. The positive trading days are compressed in like 10 days. So for the other sort of 355 days, it's just boring as hell. And so do your best to kind of just get yourself psychologically ready for potentially what could be another boring year, 2 years, 3 years. We know where this is going, but I've personally found it a little bit challenging because my expectations didn't align with reality, and I've had to kind of reset and go, all right, we still got the fastest horse in the race. The use case and the value proposition is good as ever, and I couldn't be more bullish. It's just green lights everywhere I look. And maybe that's not reflected in the value today, like in the price, but you're not too late. And yeah, that's all I would say. I think I want to finish on that kind of optimistic note.
That's a great way to end. Thanks for your time, Dale.
Awesome. Thank you, Anja. Great chatting to you.
Likewise. That's it for this week on The Honest Money Show. A big shout out again to shopbitcoin.com.au for making this episode possible. Until next week, stay smart with your money and stay decentralized.